Good evening, everyone. This is Henry Gamble with simplertrading.com. Tonight's video, I wanted to look at the idea with you of skew. So as we head into the election, we know that this is kind of an important volatility kind of event where there's heightened emotion around it, and you may see that priced into the market. So if we start off by looking at, and I'm using the 17 days because I think this is a good place to make this point. And the Delta 20s here are going for about $3.50. Then if you come over and look at the Delta 20s on the call side, these are only going for $2.16. So there's a big discrepancy, and it's part of what can make, just coming out in the outright purchase of out of the money calls can be a difficult thing to make money on, because more often than not, you'll see this skew start to normalize, and you'll see the put implied volatility come in a little bit. And now that's, of course, barring we don't have some type of drastic decline, but by turning this thought process into an unbalanced butterfly, I think you can really create some high probability trades for yourself in this market environment. We were talking about it, executing it over here on Tastyworks, which is another one of my favorite platforms. But I love looking at this here because let's just say we set this trade up again. I'm going to look at the long put fly. Bear with me as I customize this with you. So now that we have this spread set up, remember all it's really doing is focusing on the idea that you're selling that Delta 20 put, but then if it is approaching the 312 strike, you benefit from the 322 that would be in the money. I love the way that Tasty shows you that the probability of profit, the chance that you're going to make at least $1 is 86%. So I really like putting myself in those higher probability trades and then doing it in a way where the maximum profit is better than 1-to-1 against the max loss. So, it's better than a coin flip on max profit, max loss, and then just the structure of the trade says you have a really good chance of at least making $1. So I think rather than discussing what the moves might be if a certain candidate wins, try to think from a delta neutral, selling premium, trying to capitalize on high skew. That kind of approach I think will serve you better over the long haul, and I hope it gives you something to think about over the next 17 days. So y'all have a great evening, and we'll see you at the next free video.